Hey, what's up everyone? JT here. Welcome to Pineapple Money, where I talk about stock market news as well as investing for that long-term portfolio. Today's video is a little different. I'm going to be talking about the famous or infamous
Like Robinhood. Well, for Robinhood, that might be the case.
I wasn't really planning on making a video on Robinhood since to me it was just another tool I used to keep track of my investments, but with recent news of it got me kind of thinking about Robinhood more as a company. Now, if you're watching this video, you're either in Camp 1, where you have a Robinhood account, and you're on the fence to whether you should switch towards another brokerage such as Fidleity, TD, E-Trade, Schwab, etc., etc. Or you're in Camp 2, where you have a Robinhood account, and like your first ever boyfriend or girlfriend, you'll probably just try to stick with it regardless of what anyone says. Or you're in Camp 3, where you probably just heard of Robinhood and want to get some more information on whether you should open an account with them. Now, I'll leave some timestamps below so you can move around to see which section you want to watch, but I encourage you to watch the entire thing so hopefully you can have a better understanding on my thought process towards my conclusion on whether deciding to switch or keep my Robinhood account. Now lastly, I want to remind everyone that if you find anything interesting in this video to please hit that like button down below and subscribe if you're interested in more content. And I also want to say that I'm not a financial advisor of any kind, so please do your own due diligence before investing. Thank you. Alright, let's get started. For anyone who isn't aware, Robinhood is a brokerage platform that made its debut back in 2013, highlighting their $0 commissions, which at the time was unprecedented. Many bigger brokers and banks charge $5 to $10 for each transaction, which included buying and selling stocks. However, Robinhood had a mission.
The mission of Robinhood is to democratize America's financial system,
Which meant they wanted everyone to have access to the financial markets, thus the name Robinhood. In the upcoming years, their user base grew very quickly. First as a mobile app, and now the inclusion of a desktop interface. Robinhood became a very popular brokerage amongst millennials and a younger crowd. Fast forward to today in 2020, Robinhood has over 13 million users on the platform, an average user age of 31, and more than half of those users have never invested before. And Robinhood investors also somehow become synonymous with young retail investors on the bigger news media outlets, which they also sometimes like to call Robinhooders. Now, what happened to the other brokerages? Well, as Robinhood's popularity grew with their $0 commissions, the bigger brokerages and banks probably felt pressured to adjust their business model as well. Well, if we actually take a look, back in October 2019, the bigger brokerages such as Schwab, TD, and Fidelity, and so on, cut their online stock and ETF trading commissions down to zero. Now, in modern day, zero trading commission has become normalized. Even new brokerages such as Acorn, M1 Finance, as well as Weibo have created their own $0 commissions brokerages. Maybe it would be bold of me to say, but I think Robinhood created a stock market revolution, drawing more investors into the financial markets. Now, I think it's really important to understand how Robinhood makes their money, especially as a user of the brokerage. Now, to my understanding, Robinhood makes their revenue through 5 different ways, which is listed on the website right here. The first one is Robinhood Gold, which of course is their monthly membership fee. The second one is rebates from market makers and trading venues. The third is income generated from cash. Fourth, stock loan income from counterparties. And fifth, interchange fees from purchases made from the cash management debit card, and as well as fees from their program banks. So I'm going to actually go to the second one here since this is the most controversial one. This is controversial because what Robinhood is doing is that it's selling order flow. So what that means is that Robinhood is selling your data to high frequency traders. who benefits off of your order that you're giving to the brokerage, which is Robinhood. So pretty much these high frequency traders are executing trades that are so fast that they're way before us and only making pennies off the dollar. So let me explain in the order flow chart. So looking at the order flow chart, like I said before, Robinhood is selling order flow. So you as the investor, for example, let's say you are buying a share of Apple. That order is going to be sent over to the brokerage and then sent over to the wholesaler, which could be high frequency traders. And from there, these wholesalers can execute a trade faster or before you, and they will give that order back to the brokerage, will then allow you to buy a share of Apple. So what it's doing is that you are pretty much coming in after what those traders are getting and probably getting a minimal or maybe pennies off the dollar, a better deal than you. And if you ever watched The Social Dilemma on Netflix, there's an interesting quote in the movie stating, if you don't pay for the product, you are the products. Granted, this is also commonplace amongst other online brokers, but let's take a look at the difference. Right now I'm currently on CNBC's website, and this chart is from the source of Piper Sandler and the SEC filings. So as we take a look at the broker Robinhood, they made a total of $90 million through revenues from pay order flow, and in quarter two they doubled that to $180 million. As we compare this to other brokers such as Charles Schwab, E-Trade, and TD Ameritrade, 53, 66, 79, 110, and TD Ameritrade of course has a lot, 202 and 324. But as we also look at the rates, they also are a little bit different. I would say that Robinhood has in general higher rates compared to the other brokerages. And as we know, TD Ameritrade is much vastly bigger than Robinhood in general. So this whole selling order flow is commonplace, but it's also, in a sense, a little concerning for people like us, especially retail investors, because there's concern that this practice is taking advantage of us. As a personal user of both Robinhood and Fidleity, whenever I do commit trades, I notice the difference in how Robinhood feels and the times as well compared to Fidleity, which I'm just putting out there. But this is also a good segue into my own history with Robinhood itself. Personally, I first opened up my Robinhood back in 2017, and I actually remember putting about, I think, $100 to $500 into it just to see how it went. And actually, to my surprise, I am sure, like many others, I really loved it. I felt like the interface, the trades, and the stock management was just made very straightforward to the user. Being able to just see my investments change in real time in big green digits, I became super obsessed, and honestly, I would check the stock markets every day. I mean, honestly, I even bought my first Tesla share through Robinhood. But in contrast, back then, I also did use Fidleity, but I would barely touch it just because of the commissions, and also it was kind of clunky to use and just overall less appealing. Therefore, I generally just became more active on the markets just because of my Robinhood account. And I would say for small investors, having no commission trading was an enormous game changer. And in general, that actually just really enticed me to use it until this today. Now, since I reviewed my history with Robinhood, I also want to jump into the pros and cons from what I found. Starting off with the negatives for Robinhood, I want to cover three of them. The first one are and is headlines. Robinhood is in headlines so much more often than any other brokerage. I feel like every other month there's something going on with Robinhood, and not in a good way. The first one is the outages. Robinhood is notorious for their outages. They even had outages in May as well as August, and most famously they had outages in March, where they had pretty much 3 outages in the span of 2 weeks. And if anyone who is aware, March was the time when the markets had crashed and were just in general very volatile. So traders could not get in and out of those trades on March 2nd, March 9th, and March 12th. It got to the point that it was so bad that Robinhood also had to issue credit back to users of not, of course, covering their whole accounts of what they lost, but users also had to file federal class action lawsuits against Robinhood. The next news was that in June of 2020, someone unfortunately died, Alex Kearns, because he saw a negative balance of $730,000. And pretty much this was happening due to an option trade that's gone wrong. And for anyone who's not aware of what option trades are, it's pretty much a trading method where you leverage your position. The Robinhood founders also issued a letter regarding this incident, and they gave their shared steps to improve financial education on their platform. Robinhood is also under SEC investigation in regards to how they handled their March outages as well as their high-speed trading disclosures. And for anyone who's aware, whenever the SEC or FINRA gets involved, it is pretty serious. And lastly, to bring up to current news, October 2020, pretty much close to 2,000 Robinhood accounts have been hacked, where the accounts have been looted with their money and shares. And while there's a total of 13 million users currently on Robinhood, any account that has been hacked is unacceptable. Granted, the issues presented, Robinhood has been trying to fix, or is probably trying to fix them, and I'm sure with the recent incident of their hacking, they will probably implement a better customer service, but then again, I'm giving them the benefit of the doubt currently. But think about it. Robinhood is trying to push the boundaries of fintech, but they are still struggling for the core aspects for the user like you and I. The second negative is the slow fills from Robinhood. Like I mentioned previously on how Robinhood can make their money, I'm surprised that investors are still surprised that Robinhood sells your data to high-frequency trading firms with any product or service. If you don't pay for the product, you are the product. And how this actually affects investors trading is that the orders you sent out to sell or buy can get processed at a snail's pace and is noticeably slower than the bigger brokerages. The third negative is customer support. Robinhood is notorious for not having customer support that isn't on par to the bigger brokerages. While yes, they do have customer service agents who will email you back with any questions you have, there isn't customer service like, let's say, Fidleity, where they can hold your hand if you need anything, and I mean anything. From the recent account hackings, it has become more apparent that Robinhood doesn't have even a support phone number to call in emergencies. Now, granted, after this incident, I'm sure Robinhood will somehow implement a stronger customer support team and hopefully put in at least a telephone line. Now, let's go to the positives. One of the first positives I would say Robinhood has is the user interface. I would say the biggest thing that Robinhood has going for it is the interface that it presents to people. Robinhood's interface is simple, straightforward, and almost anyone can learn how to trade stocks like Apple within minutes. And you can trade Apple stock anywhere on the go with your phone. It's like any other normal application. All the simple visuals and how the application is presented is very, very appealing. And I would arguably say that Robinhood's mobile interface is better than a lot of other brokerages right now. The second thing having going for it is Robinhood is the OG brokerage with the zero commissions. They're the one that started the wave to have zero commissions for the whole financial markets. While this might not mean much to some people, but Robinhood also has a name brand per se that a lot of people know about. While some other companies still charge, let's say, about 65 cents for option contracts, Robinhood doesn't really charge anything, maybe 2 cents, but that's essentially like $0 commissions anyways. Robinhood has that name brand. Now, let's compare with other brokerages. I want to take a look at Robinhood compared to the other bigger brokerages. I'm going to go over 4 different points. Alright, let's start with the first one. The first one is $0 commissions. Nowadays, all brokers practically have $0 commissions when trading stocks and ETFs, etc., etc. And of course, Robinhood is one of the main factors to help push this trend. The second thing is the technical tools, or pretty much technical analysis with the charts. Robinhood's technical tools are pretty much non-existent or very, very minimal, especially when compared to TD's Thinkorswim platform or Fidelity's Active Trader Pro. Robinhood's chart barely provides any tools and settings like viewing trades per minute or 5 minutes, and these settings actually cannot be changed on Robinhood's chart. While of course you have much more complexity and advanced systems on TD's Thinkorswim and Fidelity's Active Trader Pro. Any investor can tell you for technical analysis, pretty much any other bigger brokerages will have a way more advanced system. The third point is IRAs, Roth IRAs, and 401ks. These services are not really provided on Robinhood. While this might not be a big deal for a lot of people, there are a lot of investors who want a brokerage to have a Roth IRA, 401k, and just have everything together on one general brokerage account so they can have everything in one place. And of course, Robinhood doesn't offer these services, unfortunately. And now the fourth thing, which is I would say one of the biggest things, is customer support. Robinhood has a very minimal customer support, with their services very limited to only probably just email. When looking to the bigger brokerages such as Charles Schwab, TD, Fidelity, having the option to call someone or even physically walk in to a broker location, there is something reassuring that you can hold your life savings with them. And of course, if you have any questions, they can also hold your hand through that as well. Now here's my straightforward opinion on whether I think Robinhood is still worthwhile to keep. So the first one, if you're someone who's on the fence on whether you should switch from Robinhood to another bigger brokerage, I would say just do it. The bigger brokerages have so much more to offer. The only thing I can think of someone holding onto their Robinhood account is probably just the interface and maybe not wanting to pay that $75 asset transfer fee. The second one, if you're someone who's still determined to use Robinhood, just be aware of the negatives, because I'm sure what I'm saying isn't really getting through, and that's totally fine. Just know that Robinhood is a double-edged sword. Third, if you're someone who has not even started a brokerage account, I think Robinhood is a great account to get started with since it's very user-friendly. Just be aware of the negatives and know that there will be features that you may want that Robinhood simply doesn't offer. But I would also like to say, starting with a bigger brokerage such as TD, Fidelity, Charles Schwab, etc., they will give you probably better trading rules to succeed for the future. Yes, their system will be definitely complex and advanced at first, but learning the system earlier can possibly make you a better trader or investor for the future. Now, me personally, my Robinhood account is still active, and I'll slowly make my full transition to Fidelity or TD. And actually, I was always interested in making a Thinkorswim platform. But the main reason why I'm planning to have my Robinhood account still open is simply just to check the stock prices because of its easy to use user interface. So, the TLDR is if you skipped all the way to the end right now, Robinhood is a great beginner platform and was a revolution when they first came out. But there are so many bigger, better, and safer brokerages out there right now, and using Robinhood is simply not worthwhile anymore. So, don't forget to comment below on what you think of Robinhood as a brokerage. Thank you so much for watching. Peace.